our show today with me is Eric West. He is an investor, a homeowner, and a top-producing Countrywide lender. Hi, Eric. Welcome to our show.
Hi, Kristi. How are you?
I'm doing great. This show is a live call-in show, so give us a ring with any questions on real estate that you might have as an owner, investor, as a buyer, first-time buyer. Here in the San Fernando Valley at 818-773-0654. So, Eric, while we're waiting for our first caller, I'd like to ask you, as a lender, how has all this media coverage of the fall of the subprime market affected loans?
It has had a major effect recently, actually, because loans have been affected. Like certain loan programs that we had in process that were zero down, for example, have been reevaluated because of what's happened in the subprime market, so they're more risky now. But because Countrywide is a direct lender and the #1 lender, we've also not done high-risk loans for the most part, so we're now reevaluating the type of product that we offer, and we're making sure that we're not going to continue offering any products that are too risky, that might have been considered risky, in order to avoid, having that fallout.
That's excellent, because I do know that a lot of people are really panicked right now, thinking that they wouldn't be able to get a loan where they may have been able to before. How do you think it affects the home buyer that's maybe looking to buy their first home here in the San Fernando Valley, or maybe someone looking to trade up into a bigger home? How does all this debacle in the subprime market affect their home buying ability right now to get a loan with their down payments and interest rates?
Well, it's all FICO driven. So really, there's still zero down programs available depending on your FICO. So some of the FICO scores that were an option previously with zero down may no longer be an option, but there's other alternatives now with maybe 5 or 10% down. For those people that want to focus on zero down, it really depends on their FICO score. So it's really important to maintain a good FICO score for the most part, but there's still options.
And the FICO score, by the way, is the Fair Isaac rating company that basically rates how much your credit you use and using it well, and how much debt you have. So keeping your debt down and paying your credit off is very important to keep your score high to get loans. As you know, we have a lot of REOs, and specifically the Valley. We have over 160 REOs, which stands for real estate owned or foreclosure properties here in the San Fernando Valley right now. Are you seeing a lot of deals come across your desk of people buying these REO properties?
Occasionally, yeah. Right now, actually, I have a couple in process. So, like a year ago, REOs were pretty much almost non-existent. So, yeah, that is increasing. But it's an opportunity for people that maybe couldn't afford properties previously to purchase an REO.
Yes, I know personally myself that I've been working with some people, and they're getting $50,000 and $100,000 and $150,000 equity in these REOs, because what happens with the lenders is they keep reducing the prices of their property until it sells. It's not like a homeowner, where a homeowner will put it on the property at market, and so does a bank, an REO, but then a bank will go ahead and systematically reduce every 45, 30 days, where a homeowner may hold out and not reduce it as much, and that's where the great equity is coming in with a lot of these REOs. I want to ask you, going back to the subprime fall in the market, what is happening with the investor now? We saw these investors before, and they were doing zero down loans, 5% down, yes, as an investor. How is this now working when investors come to you to get a loan to buy a property here in the Valley? What happens?
The first thing that, of course, lenders do is they look at the investor, because they feel in some instances that an investor is more likely to foreclose than an owner-occupant or second home, for example. So they've made the restrictions more stringent on an investment loan versus a second home and owner-occupied. So whereas a zero down was available before, 5% down is typically the minimum required loan amount now in down payment. So that's something that's definitely affected it. But again, they're looking at FICO score and reserve. Reserve meaning the amount of money that you have to have in your bank or in a liquid account per property that you own. That's essential. A lot of people don't really maintain a lot of reserve in their bank accounts because they figure, I own it, and the property will service itself. Well, there's other things to keep in mind, too, when you're servicing property, which you know a lot about, in terms of making sure you have sufficient reserve. So that's something that we're really requiring, is a strong reserve.
And what Eric is talking about is both Eric and I are avid real estate investors ourselves. I own 22 investment properties, 4 of them here in the San Fernando Valley, and I have personally done loans with Eric, and I know that I'm always required to have at least 6 months reserve normally in the bank, and that's principal, interest, tax, and insurance for each investment property that I buy, along with maintaining a good FICO score.